Good morning to everyone. Dear Professor Agung Darmawan Bugdadi, as a coordinator program of Management Bachelor, and also Professor Dr. Gatot Nazir Ahmad as the first supervisor, and Ms. Itis Fatarina Mafiro as the second supervisor for my thesis at this time. So today I'm going to present my thesis with the influence of business risk, firm size, and risk management on the value of property and real estate sector companies list on the Indonesian Stock Exchange for the 2018 until 2020 to 2022 period. And my name is Alvidro Ramadhansyah Armas, with my number is 17056-220. So in the first one, there is a table of contents, which has in the first is the introductions, which has background, research questions, research objectives, and research benefits. And the second one is the literature review, and there is a literature review and theoretical framework and hypothesis. And the third one is research methodology, which has a population and sample, data collection techniques, and data analysis techniques. The first one, the introduction. So the background in this research, so in the last 5 years, the property and real estate sector has experienced rapid growth in various countries around the world. This growth is due to several factors, including increasing urbanization, economic development, and demand for residential and commercial properties. As a result of this growth, the property and real estate sector has become one of the main sectors in the economy that offers attractive investment opportunities. Property and real estate business is a business or business activity carried out by individuals or companies engaged in the ownership of real estate or ownership rights to property in the form and land which can be used as an asset. And the next one is the specialty in this thesis is the property and real estate sector has experienced rapid growth in the last 5 years, driven by urbanization, economic development, and housing demand. This growth is also supported by government policies such as 100% loan and to value and green cities for greener future. Greener future. The government also emphasized the importance of sustainable development as seen in the Archipelago Capital project, which is aimed at becoming green city. In President Jokowi's era, the property sector made a significant contribution to GDP, although in the second quarter of 2023, there was a decline of 12 and 30%. However, sales of large homes increased 15.11%, indicating potential for recovery. The government policies such as the Job Creation Law and the EKN Law support the growth of the property sector, and this research by Liman Sector in 2023. So the variable in this thesis is business risk, firm value, and the enterprise risk management. In the context of this research, business risk, company size, and risk management practices are identified as factors that may influence company value. Business risk can affect operational activities, investor confidence, and financial performance. Company size, although it can increase share price, can also have a negative impact on company value. As several studies have shown, risk management practices, especially enterprise risk management, or we can call it ARM, are seen as an important element in increasing company value. This research is innovative because it explores new variables that have never been tested before in the property and real estate industry. For example, ERM measurement can provide a better understanding of how risks are identified and managed. The novelty of this research lies in the new contribution to the understanding of risk management in sector that continues to develop. Thus, this research is expected to provide a more in-depth view of risk management in the property and real estate sector, as well as valuable contribution to stakeholders in this industry. And also the research questions based on the background that has been prepared above. The problem in the research can be formatted, which are described as follows. The first one is, does business risk affect the company value? The second one is, does firm size affect company values? And the third one is, does risk management affect company value? So the research purposes for this research is based on the problem formulation described before. The research objective raised by the researcher include the first one, to test whether business risk has an effect to company value. The second one is to test whether firm size has an effect to company value. And the last one is to test whether risk management has an effect on company value. The benefits of this research is the first one, the theoretical benefits. Through this research, it is hoped that it can provide additional insight into knowledge related to factors that influence company values, especially business risk, firm size, and risk management. The second one is practical benefits. There are also so many types of practical benefits, but for this research is for investor. This research is useful for investor and potential investor as recommendation in determining the right stock investment choices and understanding the risk that will borne by considering the company value, which is influenced by business risk, firm size, and risk management factors. And the second one is for companies. This research is useful for company management in making decisions in an effort to increase the value of their company. And the result of the research can be used as a reference and consideration by real estate and property companies listed on the IDX regarding the influence of business risk, firm size, and risk management factors on the value of company. And then the second one is the practical benefits for researchers. It is hoped that this research can contribute as a meaning of thinking in order to increase knowledge in the field of risk management and increase the body knowledge regarding real condition in the field related to the discipline of management, namely regarding risk management in its influence of company value in property and real estate company listed on IDX. And for the academics, this research is expected to strengthen previous research so that can motivate future researchers, especially regarding the use of business risk, firm size, and risk management factors on the value of property and real estate companies listed on the IDX, and is expected to provide insight into related research references. And the second chapter is the literature review. There are 3 points that we can hope to show that literature reviews, theoretical framework, and the hypothesis. In the literature review, in this research using the signal theory according to Walk et al., the signal theory explains the reasons why companies present information for the benefits of the capital markets. Manager provides signals to stakeholders to reduce information asymmetry. Companies can implement ERM disclosure. ERM disclosure can be signaled to stakeholders and can be used to reduce information asymmetry. Manager can provide positive signal to stakeholders so this signal can build a positive company image. To reduce the asymmetric information, companies can publish financial reports that are used as information for investors, that the level of investors' confidence will increase and reduce uncertainty so that company value can increase. And the investor perceptions that can be obtained through the signal given by company manager, both positive and negative signal, can influence change in company value. So the next one is the definition of the variable This one is business risk, the independent variable. Business risk is one of the factors that influence manager decisions regarding the capital structure of a company. Business risk is the uncertainty faced by a company in carrying out its business activities. And the research by Giuliani and Samadi prov- proves that business risk has a positive influence on the company value. However, in investment analysis, risk is defined as the possibility that the result of the money obtained will divide from those expected. But in this research, company will be measured using the following model, like in this photo. And the second one is the firm size. As the independent variable, according to Ahmad et al., company size reflects the size of the company assets. The size of the company will influence its capital structure requirements because the larger the company size, the greater the tendency to use debt for the capital used by the company. The larger the company size, the more information the company can provide to external parties with the aim of fulfilling public requests. The firm size formula is as follows, like this. And for the definition in the next one is the risk management as the independent variable. The 8 components of enterprise risk management include the A is environment. The interval environment provides us perspective on risk to everyone in the organization. And then the second one is objection section. Objectives must exist before management can identify potential events that influence the achievement of those objectives. And event identification. Internal and external events that affect the achievement of the entity's objective and must be identified, namely by distinguish between risk and opportunities. And risk assessment. Existing risks are analyzed by considering the possibility and impact that will occur as a basis for determining how the risk is managed. And risk response. Management chooses to respond to risk by avoiding, accepting, reducing, or sharing risk to align the risk in accordance with risk tolerance and risk appetite. And then control activities, policies, and procedures that are established and implemented to help ensure response to risk are carried out effectively. And then information and communication. Relevant information is identified, captured, and communicated in a form and time frame that allows everyone to carry out their responsibility. And the last one is the monitoring. The all company risk management is monitor and modification are in if necessary. And then the last one is firm value. This is the last dependent variable. Company value is the market value that is able to provide maximum prosperity for shareholders in company shares price increase. There are many ways to calculate company values, for example, price to book values. And then the next one is PER or price earning ratio. And then the next one is earning per share. And then the last one is Tobin's key. Tobin's key is generally used as a reference in research investigating the performance and value of real estate companies as proxy for company value, which reflects the stock market value relative to the market and relative to the market value of the property which has a company assets are based. So in the unique in this thesis is firm value in this research to calculate the company value. Two processes are used, namely Tobinski and EPS. The reason why this research focuses on Tobinski and EPS as proxies is because the combination of these two proxies remains relevant to the research focus on the influence of business risk, firm size, and risk management on company value in the property and real estate sector. With Tobinski gets an idea of how the market assess the value of company asset compared to replacement cost or cost of procuring those assessed. Meanwhile, EPS provides an indication of how efficient the company is in generating net profit for each share outstanding. By including Tobinski and EPS, they can more deeply explore the relationship between firm value, risk management, and financial performance. So in the next one, in the hypothesis in this research, based on previous research conducted by Fwadi et al. State that the research result show that business risk has positive and significant effect on company value. Based on the description above, it can be concluded that the first hypothesis in the research is H1 business risk has a positive effect on company value. So the next hypothesis is based on previous research. This is in line with research conducted by Natsir and Yusbardini, which found that firm size had a significant positive effect on the company value. Based on the description above, it can be concluded that the second hypothesis in this research is H2 firm size has a positive impact on company value. And the last one, based on research conducted by Septianto, who also studied the property and real estate sector as a research objective, revealed that ERM has a significant positive impact on company value. So the H3 on this research is risk management has positive impact on company value. And the next one is the theoretical framework. The image above is the theoretical framework for this research, which has 3 independent variables and 1 dependent variable. These variables are interconnected, where business risk, firm size, and risk management as the independent variables have an influence on the dependent variable, namely the company value variable. And the last one is the research methodology. There are 3 points that I hope we can share. The first one is the population and sample. The second one is data collection techniques and the data analysis techniques. So in the population and sample, sampling in this research use a purposive sampling method, which purposive sampling is a sampling method based on certain consideration, which are also based on certain objective. And we choose the property in real estate companies that published in 2018 until 2022. And this is the operational variable. That the first one is business risk. The definition of business risk is the level of risk of the company operations if it does or not use. And for the proxies, we use like business risk a bit divided by total asset and times as 100%. And in the firm size, we use the definition of a large company size indicate that the company is experiencing growth. And the firm size is LN total asset. And the third one is risk management. The enterprise risk management is a process that is influenced by the company board, management, and the other personnel of the entity, applied in determining strategy and applies throughout the company, designed to recognize potential events that can affect the entity, so as they achieve the entity's objective. And the last one is the firm value. In this research, we use Tobinski and EPS. That company value is reflection of company performance, which can influence the interests of shareholders or investors. And the last one is for the data analysis. The data analysis technique used in this research use secondary data that has been obtained, and then the data is processed using the EVS program. This data analysis technique uses several tests and data analysis consisting of the descriptive analysis. There are classic assumption tests, consisting of A, the normality test, the B, the multicollinearity test, and the C, the heteroscedasticity test. And the panel data regression analysis, coefficient of determination R square, and the partial test, the statistical test. And we hope the result and discussion of each data analysis technique used can be explained in the research results and the subsequent discussion. So thank you. I think that's all. Wassalamualaikum warahmatullahi wabarakatuh.